Hello everyone, welcome to the IchimokuCharts.com daily analysis for the SP 500 for Friday, April the 30th, 2010. Well, the change of trend today, and quite a dramatic change of trend. The market has closed down fairly substantially, and we now have a candle with a lower high and a lower low, and that's immediately after the market changed to an uptrend the previous day. Now, it's a very large red body candle, and the red body candle denotes that the sellers have made some very, very strong net bearish progress on the day between the open and the close. The market has also closed down at the low after opening up towards the high, and that suggests that the sellers closed the trading day in control, and they showed very strong commitment to taking this market lower. The sellers are also quite keen, and we gauge that by the distance of the current close away from the previous close. So quite a bearish day for the market, as opposed to the previous day, which was fairly bullish. Now, interestingly, the potential support that we may have seen come in at around 1200 has totally failed on this very strong bullish drive down to test another support area down around 1179. So that round number is failing to hold as support or resistance now. And on the past two occasions, we had a bullish close up above and a bearish close down below. Now, interestingly, the market is trading down to around this area, which was previous resistance, then support, and within this region around 1179, 1180. So we should watch how the market reacts to around that area. Now, interestingly, we've also highlighted another potential pattern that's developing. It's a head and shoulders reversal pattern, and the requirements are a previous uptrend, and here we have a very strong uptrend. We have a peak that terminates initially and creates the left shoulder. We have a peak that terminates higher than the left shoulder peak and sells off and then creates the head, and then a peak that terminates below the head shoulder and potentially creates the right shoulder. So here we have left shoulder, head, right shoulder. We then draw a neckline between the two shoulders here, and any close down below the neckline there will actually give us completion of the pattern. So at the moment we don't have completion of that pattern, but there is a strong chance with this bearishness in the market that the market will trade down through that neckline and complete the head and shoulders reversal pattern. So here, once again, here we have the left shoulder, the head, and the right shoulder forming, which isn't quite formed until we trade down through there. Now, it would be quite a much stronger signal if we had a very bearish close down below there. So the market just trading down below and then failing to close below is not completion of the pattern, but a stronger signal would be the market closing below there and closing with quite bearish short-term dynamics. Now, the other thing that we need to take account of with these patterns, and especially reversals, is what sort of close-by support do you have to the downside, and that can actually influence the likelihood that the market will reach any of the targets. And the target that we come up with is the distance from the head down to the neckline, projected down from the breakout. So we haven't had the breakout yet, so I won't draw that in yet, but it's probably roughly down around 1150 or so. But we have very solid areas of support all the way down through to that region. So that is not going to be a very reliable pattern, a target for this pattern, if the market does break out to the downside. Now, just looking at the Ichimoku charts, we are still trading up above the cloud or the Kumo, so we do need to consider that the market is overall bullish in the big picture time frame. The market has closed down below the Kijun-sen and the Tenkan-sen again, which is telling us that the market is now bearish in the medium-term and fast-term time frames, and we're getting oscillation above and below both of these indicators, which reflects the market being in equilibrium around these levels, and that's why both of these indicators have turned flat. The market really doesn't have any solid momentum in either direction, and that's evidenced by this large congestion area that the market is now in. So to the upside, though, if the market does change trend again and with an uptrend, which we would require evidence of a higher high and a higher low for that to occur, there is once again this 1200 region that the market will interact with, and we need to watch how the market behaves around that area. And certainly up around the 1214 up to 1220 area will act as a potential area of resistance to the upside. Above there we have the area at around 1265 that will offer potential resistance. As we said, to the downside, very, very strong support down below though, so we need to be patient, wait for a breakout from this very large congestion area that the market's trading in that looks as though it's forming as a head and shoulders pattern. There is potential to trade the breakout to the downside, but we do need to be careful because of the support below.